Hey everybody, it's Steve. I go by Stever82 on YouTube, Library, and all the different platforms that I share my stuff on, like Torum, and of course, Publish X, because who isn't going to be on Publish OX, where you can read a lot of articles, give tips to people, you get some of that money back, and then every once in a while they do one of these contests. This is a contest called Crop Spotter, where we're going to go over Harvest Finance. And I will have to admit, I feel really bad that I didn't know about Harvest Finance until it got featured here in this contents by PublishX, because it reminds me a lot of Celsius and the Celsius flywheel. And Celsius has really taken off and become one of the top kind of CFI platforms out there. And obviously, from what I can see, Harvest Finance, who's using a very similar method, is become one of the best DeFi platforms out there. So we're going to go ahead and take a quick look at that. Then I'm going to tell you about how I would use the platform. Unfortunately, I won't be showing you a lot of examples because one of the reasons I kind of missed the boat on this is Ethereum has priced me out because I didn't buy a big ETH bag beforehand. I only usually like to invest around $500 cap at any one time in a newer project, maybe a little bit more if it's something I'm really comfortable with. Paying gas fees to swap the tokens around in the $50 to $60 range, or to stake them or to move them, it priced me out. Harvest could have helped me solve that. So we're going to go over how this works, and then I'm going to give you an idea of the strategy that I would be using. This might be a bit of a longer video, so I hope you stick with me. Thank you to all my new subs. Let me know if you want to see more content like this where I review projects like this. I have another one I'm going to do tomorrow on Binance Smart Chain and PancakeSwap. I've started using that because it didn't price me out, but I'm really wondering if I need to just go ahead and bite the bullet and get into Harvest Finance by maybe just buying and staking some farm tokens, which is a pretty easy strategy. So let's go ahead and check out the platform. We'll start here on the farming page. So what is Harvest Finance? If anybody doesn't know, it's basically a yield farming aggregator. And so what that means, if you don't have any idea what that means, is that you can come here, you can deposit different cryptocurrencies. They will then try to use those cryptocurrencies in all the different yield farms that pop up in any area that they can get access to, mostly specializing in things on the Ethereum platform, but not limited to that. They will use your assets, they will wrap them if they need to be wrapped to be used in certain protocols, and then they will earn a yield and they will pay you back based on your amount deposited. And the way that they're breaking down the money that they earned is really unique. They're taking 70% of it and giving it to the depositors, and then they are giving 30% of it to be used to buy farm token off of the market and then pay that farm token to stakers. That creates a flywheel effect that farm token will always have a very big buyer coming in to buy up assets every single week that they come in and they have to do a payout to their stakers. That kind of circular ability to keep a demand on a token is really good, because the only time you're going to see farm token do big drops is when very big investors start to finally decide to get out of farm. And that will happen. People will leave. There will be people who got in at the lower prices, and as this goes up and up and up, they will exit. But it didn't have a pre-mine. There was no VC money. So the only big investors are people who had money and got in early because they saw what this could be. As you can see, it's been around for about 23 weeks. And so just to get a little bit more into the idea, basically you would come here, you can look at all the different assets that they take, and there's a lot of them. They group them basically first by special ones that are newer. So they have the wrapped ETH, and then they give you the Harvest APY. The Harvest APY will look higher than maybe they will see than you would expect to be able to use it. So this is basically only earning 0.47 in comp, but you're earning 5.6 in farm. So that helps you. This one here is more half and half. You're earning 30% APY because you're staking the Sushi ETH tokens, and then you are getting 23% on sushi, but a combined total now, because you're getting the farm tokens too, of 54%. So this is how this is getting so high. They don't do the same thing on everything, though. These are tokens that are part of the whole GameStop thing, and they're kind of, I believe they're matched to GameStop tokens. I didn't research every single one of these tokens, so I won't be able to explain them to you. But we'll go over the kind of things that they talk about. They have the stable coins with APYs that vary from 10% to 75%. And then you can open up any one of these and you can see individually which ones are paying out at what percentages. So if you just want to come here and give them some USDC or TUSD or Tether, it looks like TUSD is paying the lowest amount, but USDC is earning a nice 43%. That's not bad. And if you want to get into more of the specialized stable coins that are out there for certain platforms, you can get even higher percentages. And these are just on stable coins, so you don't have to worry about the token price going up or down. They have their ETH 2.0 pair with the Curve ETH. They have BTC pairs, which pay up to 21%, which one is that? Okay, so Curve OPTC, that's pretty interesting to be able to make that much rewards on your Bitcoin. So you can come here, you can use the 1inch platform. As we know, they basically on 1inch, if you provide liquidity to certain pairs, you earn the token. So you can say you want to be involved in that platform. Sushi does the same thing. You can be involved there. Uni does the same thing. You can be involved in their Uni pool. Or you can be involved in the ETH pools that are whatever pool on Uni that is going to be earning Uni tokens. Or if you just do the farm token, they're going to be giving you rewards for helping you provide liquidity for their program. So that's really cool. Then you've got a couple other things in here that you can choose from. Also, they do have the ability for you to just come and stake tokens and earn a reward. So the staking tokens vary. They're going to be tokens that they can earn an amount on. And in this one, you can just come in here and go ahead and deposit your coins you get from them to be able to get rewards on each one of these tokens just by staking them. So that's a really cool feature as well. We're going to go ahead now and go into their dashboard. So if you get involved in the program, they're going to give you a really good dashboard, which gives you an idea of how much you have staked. It keeps track of the farm price. It keeps track of what pools you are in, and then it will show you everything that you have in your wallet and how it's earning for you. I'm not using the platform, so I can't show you a really good example of that, but it is nice to see that they have this. I was able to log in with my MetaMask wallet, no problem. I just don't have anything staked in their platform currently. One of the things that's kind of interesting that they're doing, and if anybody knows a little more about this, I haven't been able to totally find out, is they're supporting some additional tokens that are related to their project. One is called Grain. It's trading only at 13 cents. It's much lower than the farm token, but it allows it to go ahead. It's taking part of the harvest emissions and putting it into buying off this token. So it's another way you can make some money with the project. And then the last thing that they're doing, and this is kind of nice, is they have a way for you to be a contributor to the program. Maybe people who are making videos, who are making really nice posts. You can be rewarded with something called action points, which you can then turn in here at the platform for farm. So if anybody out there who knows more about this, if you like my video, you want to figure out a way to give me some of these, I'd appreciate it, because then I could actually try the platform out and maybe do a review with some tokens actually staking and things like that. The other thing I want to talk about is the farm token price. So we're currently at $302. That's a really solid price. It looks like it's been going up and down a little bit, right around this $300 range, where it capped out around like the $330 and it's came back down to $300. But overall, if you look at the last 30 days since the token has been out just, this month, it was sitting down here at 100, and then it went up, 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 up. And one of the reasons why a token with a program like this is going to see this kind of stuff happening is because as their amount of assets that they get on their site get bigger and bigger and bigger, they're able to make bigger returns by doing large investments and being big parts of those pools and just sucking up a lot of the rewards. And then that 70-30 split comes into play and they get a big chunk of money and they come here and they buy it. Also, because as the hype on this, like any other project, you're going to have the demand go ahead and push it up from there. And as you can see, they've had really healthy growth over the last 30 days. If you go to 90 days, I think it launched around, so it stayed around here until they really started getting going and people kind of started understanding what the project was in the last month, and their liquidity pool really grew. They also had a hack at one point, and so that might have hurt them a tiny bit, but the way that they kind of protect themselves from that is by being involved in so many different farms that even if one farm gets hacked, it would only be a small amount of the money that is currently invested in any one area. So as you can see, they currently have $759 million worth of assets currently deposited. That is very impressive, and they're making monthly payments to their farmers of $11 million. So these are very big numbers, and so it's really nice to see that they've been able to do that. So now I'm going to try a little bit about my strategy and what I would do. I hope I gave you an okay idea for what Harvest Finance is. I've just been learning about it. I do know that you deposit your tokens into them and then you can stake your tokens, and then basically they earn you yield, they pay it out to you, and they use part of that yield to buy the token. That's the simplest way to explain it. You give them your thing, it'll stake, you'll earn more of it, eventually you'll just have more as a depositor, or you buy the farm token, you stake the farm token, and then every time they do one of those 30% distributions, you will get a little bit more farm token. You can then compound that by staking it again, and when you deposit your funds with them, they will do automatic compounding if it's available in the way that they're earning you returns, which is nice because when you're dealing with chains like ETH, you might be able to, you might have 1 ETH in the pool and you're like, oh, I've got 0.1 ETH I've earned, but if I want to stake that and put that in again and start earning more, it's going to eat up more than that. It's going to eat up 0.08 ETH in fees, so I'm only netting 0.02 into the pool. It's not even worth it. I got to wait till gas fees go down. I got to wait. Oh man, if I would have been compounding more, I would have earned more. This solves that problem, which is really nice to see, because they're doing it all in the back. They're doing it in giant pools. So even if your part of that pool is only a little bit, when they do it as one big transaction, your share of that gas fee is very small. And so you get the advantage of being basically moving around your money as if you were a whale when you're just a small investor maybe. This is why I imagine this will get more popular as more people understand how it works and as they establish themselves as someone that can take care of the money. They do have audits by a few different people, so that's really good to see. Here they are right here. So that's very important. So what would I do if I was coming here? This is kind of an interesting idea. Now, there's two schools of thoughts for me. If you like 1inch, SushiSwap, or Uniswap, if you've done the research and you like, this is the premier DEX out there, it's going to be number one, it's got all the tools being built on it, and this is where people are going to be coming to do all the trading, then it's probably a good idea to look into one of these setups. To go ahead and come in here and look into doing some ETH DPI and then farming the Uni token while also farming the farm token and earning your rewards that way. This is probably one of the ways that if you are comfortable with any of these platforms and know them very well, then these are the strategies that I would dig into and look into. If you don't know these strategies and you don't know the DeFi world, but you're like, man, I really want to figure out how to make some money off of the DeFi world, but it's so confusing. I can't read code. I don't understand smart contracts. I barely know how to use Ethereum. Then the way to do it would be to do it with stable coins and our farm. So this would be the easiest way to take part in this. Do it really easily. You would deposit either any one of these major coins here. I would stick in these ones if you don't know what you're doing. If you know what you're doing, take the time to research all of these other ones, see which one you can use in your jurisdiction that has the highest return, and go ahead and use that one. That is going to take a little more due diligence on your part to watch it and make sure that nothing happens with this currency, and nothing gets out of sort. So I know Curve is a very good big platform. It's one of the other ones I need to learn about. So for now, this is the one I would probably end up using. USDC, earning, with an auto harvest through comp, they're earning really solid rewards. 8% there, 34% over there. This is where I would probably go. The other one that you can use is USDT. I like True USD, but since it's only sitting at 10% because they're not able to use it on Compound the same way, it's not as good. And then if you're more into the DAI program, then you can use DAI. For me, because I know USDC is backed by dollars and I can trade them in with Circle to get those dollars back, this is the more comfortable stable coin for me. Everyone will have to pick their own, but this is one of the safer strategies that you can use to just set yourself up with a solid return. Then once that return is big enough and you are earning enough money from that platform, that is where I would then decide to go ahead and get into the farm token or get into one of these other pools. Because you can take those USDC tokens and you can buy yourself some farm, or you can buy yourself one of the other tokens that comes out, as long as you watch their strategies and you see something new that's coming out and you're like, wow, I really want to get in on this and I want to start earning that money. So that's kind of the strategy that I would use. Obviously, one of the simplest ones would just be to take advantage of the farm flywheel effect by just buying farm tokens, staking the farm token, and getting those 30% returns, and then deciding to whether or not you're going to compound those, or if you're going to sell them and then just earn and just drive down your price of ownership from your original stake. And every time you get some profit out of there, you could move it from farm into USDC, and then start earning compounding returns on your returns from your original stake. These are the kinds of things that you can do in DeFi that really blow away traditional savings accounts. I mean, if you've got $1,000 sitting in a bank savings account earning 0.1%, it's a joke. That's like money just sitting there doing nothing, actually going down in value compared to inflation. Whereas you could come here, you could buy 2 farm tokens, you could stake those farm tokens, then you could wait until you get the payouts when they do the payouts and start buying USDC. And I guarantee you, in the course of a year, you're going to earn way more than 0.1%. And I'm not a financial analyst. I'm not somebody that fully understands the finance world, but I do know that if you're earning 40% on your money when it's sitting in the stable coins and 85% on your farm tokens. Now, the key thing on that is you're earning it on the farm token. So if you buy them at 300 and they go down to 200, and you're earning an 85% return on your tokens, but you had a 33% drop from 300 to 200, you're netting only 50% profit there. And if you had a drop that was bigger than the 85%, then you would be in trouble. Now, I don't see that happening unless there is a more serious hack or serious problem with the platform. That's the one worry in DeFi. Harvest Finance has been around now for 23 weeks. They have $700 million in their smart contracts. They have audits to back them up, but there is always a risk involved that somebody figures out a way to take these funds. So that's something I want you to make sure you do your own research. You look into the funds that you're depositing. You make sure you understand how they work. You make sure you understand that if you're doing large amounts of money and even smaller amounts of money, that you could be creating yourself some tax events when you're selling your farm tokens to move them into the other things. These are all very important things for everyone to take mind of as crypto is moving into the new world of regulation, and we all want to be able to use these gains and make these gains, but we also do not want regulators to come in and ruin the space. So that's pretty much my review of Harvest Finance. I really think it's a great program. I really think it works very close to Celsius. Celsius does the same thing where you deposit your money into them, but they hold it as a third party, and they use it to create yield, and they pay 80% of their profit back to depositors. And then they also allow people to earn in Cell Token, which creates that same kind of thing where they have to go and buy Cell Token from the market if people are deciding to earn in Cell Token. The one thing that doesn't work as well for them, they're in the fully regulated world. You have to do full KYC. You have to, and you, because of that, not everyone can take advantage of everything that they offer. For now, Harvard Finance is allowing anybody who connects to use any of their pools and do anything. That's really cool. That's really the spirit of crypto. It's the ability for us to start using our assets to earn the kind of returns that banks use. And I really hope to see this grow and continue to use. So thank you, everybody, if you checked out my video. If you have any suggestions, anything I got wrong, anything you want me to look at, please let me know. Please leave a comment. YouTube really likes the comments now. So if you took the time to hang out to the end, just at least say, hey, nice job, or, you know, you did terrible. You totally missed the boat on this. I am still learning about it, but I wanted to take a shot and just make a video on the project and share at least that a little bit about Harvest and get some of you hopefully to come and take a look at these. Because I mean, if 85% returns doesn't look good to you on this farm token, I don't know what's going on. And if 40, 30, 29% on these stable coins, and even 70, 40 on these ones isn't piquing your interest, then you're just someone who's looking for those moonshots. But this is a way to fund your moonshots. If you put a nice big amount of money into here and you take some of that money and you dump it into those little coins, well, it was money you earned in interest, so it's not the same thing if that moonshot doesn't work out, right? All right, this is really goodbye. Later.